Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. So, start of this week, UJ, I've been very bullish. As you guys know, I've been bullish on this ever since here. Again, this is going to be released by the time that price is either made it here and gone long or already gone long. So again, it'll be released after this happens. But, overall with the mentorship, even during this webinar, we spoke about it going long from either here or here. So we set our alerts already. Or if we are day trading, then we have the ability to begin to go long from the inside if we get the shifts we're looking for. However, as you all know, and we spoke about, we had that continuation theory for Dow, that double shift occur, right? 1, 2. And after that shift occurred, we understand that we put in some kind of intermediate short-term bias. And as you guys also know, as I showed you guys in the last video and the last few videos, we had traders in our mentorship, positioned on the UJ longs from here, and like really from all the way even back when we had the original accumulations back in these areas here. And one of the rules that we use to get out of trades through management is that, when we create certain ranges, especially if you're in a range like from down here, a good way to exit is to use a higher or lower time frame that shifts using that continuation structure of the double shift to get out, because what it's showing you is that there's displacement across two narratives now, and the likelihood of this being a large liquidation to continue long instantly is actually less than now of price potentially continuing to go short, which is why we use that to exit, which is why, as you guys know, as I kind of went over in the last video, but again, it was rather hard to do. When I went short in this little area right here yesterday, so this was recorded right here on the 2nd on a Monday, but I went short last night on Sunday during the Asian session. Right when I went short here and closed right here, I did that because of that double shift on a lower time frame of that Dow Theory continuation. Now, of course, in the mentorship, I have a much more in-depth version of viewing this. I have specific things you look for, specifically how you can use those candles, what kind of concepts to actually think on, that why that exists across the board, and teaches you from a ground-up understanding. So if you want to take your understanding to the next level, check it out. Otherwise, feel free to work through my entire public free YouTube library. There's a ton of very, very valuable information and a ton of information that I've seen other traders use to become profitable without even needing to join the mentorship. So again, you do not need to join. It helps, of course, because, I've built an educational platform, and then I've transformed the educational platform into a fund now. And, a lot of what I do now, at least for most of my hours of my day, is work with students and community members and, continue to elevate people to levels that they didn't even believe they could ever reach on their own. So, if you want to be a part of that and experience that firsthand, check it out. Nonetheless, I got positioned in that short. I'm not going to break it down too much. I did a video on it. So if you saw it in the last video, then I hope you guys enjoyed that. But, the idea in it was, if you don't see price really delivering what you're looking for very quickly, such as, price just running and running, because the reality is when you're positioned behind some kind of composite man move or behind some Wyckoffian move, right, or behind an institutional move, what's going to happen is when that entry is taken or when the move is ready, there's a good chance that it's going to drop off or run to new highs extremely quickly. And if it doesn't do that and it comes to break even or to lose or whatever it might be, it just might not be that moment for you to need to be involved, right? That's just the market showing you that, yes, there might have been a move here that need to be mitigated. Yes, there might be composite participators or institutional participants there. However, they're not aligned, and there's no reason to now run for a very big target, at least not right now. And then, maybe it does happen sometimes, but we work in the game of probabilities. We play a mathematical game. This is nothing more than a very big, game. And if you understand the mathematics behind it, you can be profitable in it. Not financial advice. However, if you don't and you're just forcing yourself in over and over and over again, you're going to be losing money. But the main thing I want to talk about in this specific video, right, to go over with you guys is, if you remember in the last few videos, we spoke about GU being a very, very bearish pair, for a very long time. A lot of like retail or dumb smart money is very bullish on this, trying to catch any low they can, looking as far left as they can to find, zones in here and here and here and all these weird areas, instead of focusing on the on the ranges at hand created by the most recent smart money impulse or smart money move, and now potentially sustaining that given move. Similarly, they're not thinking in terms of what is structure doing and what's it most likely to do, such as, it was bearish, it might have shifted or looked like it shifted bullish. But again, this is that idea of Elliot. So I've taught that in the last few videos. Make sure you've seen them, right? To reshift bearish. So that's just this kind of notion being put in hand, and then that notion putting in hand the newer bearish market, right? Which again, you had great entries on, and now there's new entries to be perceived. But as you guys remember, I spoke about how this market was probably going to remain bearish and that we're still bearish on it. Now, again, I don't know how this is going to play out. This is live price. It could just keep going long, in which case I'm looking to short here or here for new displacement. Again, I'm not just placing a short or waiting for price to get there. Structure, looking for that confirm off of the S&D and looking to take a short if we can, right? Similarly, same thing goes here. Of course, depending on how we begin to accumulate into it or what we do. However, that said, if you guys remember, what we spoke about last week was the idea that, hey, because we're overall bearish, we need to understand that the most likelihood of price is actually to continue to the next liquidity low or to continue for that bearish bias. And as you guys remember, I pinpointed this low and this high to you. And what I said is, instead of looking to buy off of this area here, even though it's not invalid, but instead of looking to buy off it, because we understand where we are in the market, it makes more sense. And I literally taught you guys this. So it's really important that you've seen my other videos. And if you're new, by the way, make sure you start from the very beginning and work your way up. There's a beautiful progression that you can experience yourself if you start going through my content from the bottom up. Otherwise, you're going to confuse yourself. Also, if you want to learn from me or you're in my mentorship, make sure you're just learning from one mentor. I don't care if you learn from me or someone else. There's plenty of mentors in the space. Some are really good, some are really bad. I'm not going to go and name names because I'm not in the game of doing that. However, if you do choose one, the only thing you need to do is choose one and then stick to it. Stick to it for even like a year, for 2 years, and see exactly where you are a year or 2 years from now, because, following multiple people will not really help you because people draw different Ys and draw different ways of being able to teach. And if you try to marry everything together, it's going to be too hard. I've taken the 3 main things that I've ever wanted to teach, Wyckoff, Elliot, and Dow, and married them into one of the best systems you can ever use. And that's available to you entirely on this channel and in the private mentorship through much more in-depth course content. However, you're not going to get to that understanding or that ability to recreate what I'm doing, what we do every single day, what my members do. You're not going to be able to analyze the way we do with such precision if you don't dedicate yourself to one principle, right? One philosophy. And in this case, if you want to dedicate yourself to the mentfx philosophy, use my public stuff or join the private, but you need to stick to it. Now, that said, as you guys remember, we spoke about this low to this high. And what I told you guys is, yes, it's not invalid to look for buys here. However, what I'm looking for, and this is exactly the same thing I told my mentorship, and I'll show you guys a picture of it in a second. I told them that I'll be looking for the shift to the downside here. And in the case that we get that shift, I will be looking for whatever supply created the shift to go short. And in this case, as you can see here, this is the supply that created the shift. Why is it this area here? Why is it the down candle? Because remember, we look for the last unmitigated move that created a impulse or a move that created that new range in the market. And the new range is present from this high to this low right here. And this is where it came from, right? That's the last move before price fell off and began to milk down, which means the last bit of manipulation that occurred that wasn't able to be mitigated. And again, if you have questions about what is mitigation, make sure you've seen my mitigation video. This is that area that had no price mitigation. You can see how beautiful that entry was and how beautiful the beginning of today's delivery is. And something I spoke about or tried to speak about in the last video, but it might have been drowned out by sound, is this. And here's a little nugget for all of you. There's 2 ways to use supply and demand zones. One is within a narrative and a range that you can actually use to go short off of and begin to confirm on a lower time frame using any confirmations taught on this channel and of course any of the confirmations taught in the private mentorship, which are of course exclusive, but any of you watching it can see the fractalized MBs here, the double MBs. Like, there are beautiful entries even just looking at this. And a lot of you that are public students, you guys can see the weak to strong hand transfer that breaks down below structure, which again are going to be easier to see on a lower time frame, right? There you are, right? Beautiful Wyckoff. Highs getting liquidated, highs moving lower, retest of areas to continue lower. But I'm not going to break that down right now because this is not a teaching on Wyckoff in this case. I've had a lot of videos on that, so make sure you've checked them out. But, this is how that delivers, right? If we go into here and go into mentfx trade ideas, we go up here, took a break even today, but here we go, right? We spoke about in the last webinar this idea that we want to see the break below the low, and you can see this low break happened. You can see this was all live price. You know, it might be hard to see. Maybe I can make this more bigger. There we go. Right, you can see this was live price on the date and everything. Here we go. Here's your little date, everything at the time of being taken. Again, I don't need to prove to you that this is all taken beforehand, because again, I don't do signals or anything like that anyway. I just do outlooks for the team, and you know, I did this outlook for them way in advance. However, what I want you to be able to see is that the way we trade and the way we think can be put in motion on a live market, and then from that analysis can create actual opportunities and things that you can actually use to trade. Right now, the two ways you can use zones is one, this way, which is part of the range, the most recent range, creating that supply zone where we know price needs to be mitigated to then continue, and that's exactly what we might get sometimes, right? Sometimes it won't pull back, sometimes it won't hold, but that's not what we're trying to understand a philosophy and then trade by that philosophy. The other way to use zones is to find a zone as part of a range, which in this case, if you guys remember, we spoke about the range from this low to this high because that made a breakout structure to the top side. But we also are aware of this idea of Dow and Elliot, as I've introduced it now, where, you know, we have a bearish market that looks like it shifts bullish, but, you know, the overall market has been and still is bearish. So the anticipation is that it wants to continue bearish, which means if it does, you know, we're just creating that Elliot kind of, that multi-time frame Dow or normal Elliot tendency movement where, you know, a move higher is still just a normal liquidity grab, right? That's how that occurs. So because we're overall bearish, what we do is we find the move that created that bullish run, which is this demand zone, and instead of looking for price to get here and then confirm it again to go long, just like we confirmed it to go short here, instead what we do is we use this area as a very good target to then stop trading, right? To take a big partial off and then allow price to do what it needs to do. Why? Because again, yes, price can come here and go long, but this move right here is significantly less probable than price coming into the zone, pushing off, and then continuing much lower after maybe liquidating a high. Similarly, the probability of this happening here is much lower than price coming down and maybe just pushing kind of right through it just like that, right? Now, again, a lot of dumb money is going to potentially be watching the zone to actually be like big buyers from, and guess what? You know, people can be right and we can be right, but we approach this from a statistical standpoint, right? We approach it from that mathematical edge, from that mathematical understanding, and from that why understanding. And if we're aware that multi-time frame confluence is clearly bearish and has been bearish for the last few months, there's no reason for us to assume that the bearishness doesn't want to maintain now. Now, yes, we can be wrong. Please do not forget that, right? I could be wrong about this analysis. In a few weeks when I release this, price could have done this or it could have done this. Neither makes me, you know, any bit smarter in your mind. It doesn't matter. But what matters is you understand that when you have a certain movement or a certain trend develop, that trend is the one that actually wants to hold and continue. And the main points that price wants to draw towards is the next liquidity runs on that structure, because more people oftentimes are looking to call a low than they are, you know, trying to sell into a market. So oftentimes you're going to see the runs just continue in a given direction as they have for the last, you know, God knows how long. I think we've been bearish on this market from what I remember ever since this break here, and ever since that we've been very, very bearish on this market with all the inside price action, right? And at the same time, as we've been doing that for the last X amount of months and stuff, right? We notice what? I love bringing this up, but you know, it's something that you should start thinking about. Most of retail, almost all of it, is still 80% long. This number was like 79% yesterday. Now it's 80% again, right? So people have been forcing longs ever since, like down here and here and here and here. And this is just basic liquidation. It's probably going to continue. And people keep forcing longs because, you know, the market looks overextended. But the reality is we don't think about overextended. We think about where we are in a range and where we can keep on trading, right? I don't even look at this for, you know, whatever you call discount premium or like, oh, we should be buying down here. It's not about that, because then we're once again trying to force trades back into an area, right? We're trying to force it back into a 50% area, a 61% retracement. We're trying to force it back into a mean reversion rather than looking for the continuation. Recently, I had a webinar with the students, and someone said something really funny. He said, you know, there was this billionaire trader, and his funny rule, right? His normal rule was, I buy when price is in the top right corner of my chart, and I sell when price is in the bottom left corner. And it's a funny rule, but it's very true, right? What happens is when people have this, set to auto, they're zoomed in, right, and they're looking at this, even like this, right, and they see price here. This is for them. This is like, wow, look at all this white space. I need to trade up into that white space. And they look for ways to buy, right? And they'll find any reasoning. They'll be like, well, we're in this impulse. We need to get to the 50%. That's the discount. Or like, we need to get up into this area. Look, there's a supply zone here. We need to sell up to there. Maybe there's a big supply zone here. We need to sell up. We need to buy up into there, without recognizing that the trend has been bearish. It is bearish, and it's probably going to maintain bearish. And then they all get liquidated, and they all get liquidated, right? And as the price moves further into the bottom right of your screen, everyone wants to buy more and more, because there's no way that it could be, look at all this white space here. It has to go up, right? Or black space, whatever, based on, whether or not you're using a darker background or whatever. And people want to force the opposite of what price is intending to do. And this has always been the case, right? Go to any market, go anywhere, find an area where price is, right? Just go, right? Zoom in a little bit, and right, what do you see? A lot of people might see, this is in the middle, so we wait, boom, okay, top right. A lot of people start selling, and then it works. Fuck, right? Then it gets down here. A lot of people start buying probably, right? Why? Because it's really deep on your screen. And we continue selling. People want to keep buying. They want to keep catching lows now, right? It's going to the bottom of your screen. For the most part, it keeps selling, it looks like, yeah. And it just keeps selling, keeps falling off, right? So again, yeah, the example here wasn't amazing. And again, the quote doesn't always resound, but the quote really much stands with the philosophy that we're approaching this with, right? Which is, the guy would say, if it's in the top right of my screen, I'm going to buy. If it's in, again, you just saw that right there, right? If it's in the top right of my screen, I'm going to buy. If it's in the bottom right of my screen, I'm going to sell. Why? Because people are wired to see that space and just think that we're too overextended. And then they'll make any reasoning that they can to get that buy, right? When price is here, they're looking left to find any support that price could hold off of, instead of looking for things to get liquidated and continue getting liquidated, right? So people want a reasoning for price to return. If they start seeing price go long, they look for any reasoning for it to go long. Some people are looking at here, going, it has to get long to there. Some people are looking at this, it has to get long to there. Some people are looking at this, it has to get long to there, has to get long to there, has to get long to there, has to get long to there. And what you're having is a lot of across the board, retail, hedge funds, dumb money, just losing. And you're finding yourself in this state where, again, 80% of most traders, like on a platform or whatever, are for the most part long. Why? Does this market look long? No. But at that moment, when you're especially on the charts and you're just experiencing it live, your heart's pounding, you're looking at it, you're like, there's no way it keeps going. There's no way it keeps going. But I taught you guys, if it's bearish, it should remain bearish. And it's better to be wrong once at the end of a trend than to be wrong 500 times trying to predict the low of a trend or the reversal of a trend, right? And as we look at this, right, what did I speak about? Well, I spoke about the fact that we had this 15-minute range on the inside, and even though it's a valid bullish range, the overall market has been pushing bearish. So what we'll look for is the break of that below, find the supply zone that caused that, and look to trade from that supply zone. And similarly, that's how this bias right here was created. And now you have people positioned short that have taken major partials and major runs already below this liquidity right here, which was the next liquidity run of the next structural point of people that are again trying to force longs to try and catch that long up, right? Or looking at some demand zone here or whatever it might be when it's already shifted, right? And now you have them holding for potentially either extra profit or the move back into break even, in which case we can reevaluate and see where we are, rather than forcing any just long side movement just because. So, I wanted this video to act as a reminder that you're not here to force moves at all. You're here to play with the trend, and you're here to actually play with the trend. And this is what it means to actually be with the trend, right? People say it, even retail, like 80% of these people right here, 80% of the people that are long on this market right now are basically thinking, hey, I'm with the trend. But this is what it actually looks like to be with the trend. You recognize where price is moving and what the next structural play is, aka the next draw on that liquidity, which then makes you have to reevaluate where you are in ranges. And in the case that we are breaking down and that story and that narrative is now being put forward, just like I taught you guys to remember low to high, if that breaks, I want to see it go short. That's where that comes from. And then it goes short, and then you allow yourself to make money on that short further and further and further, because what's happening is once smart money is positioned and price begins to move, that smart money is now going to either take that price to its complete decline, in which case you make a shit ton of money, or we are wrong about the institutional move, price returns to the area, maybe again gets over the high and does whatever it needs to do, in which case the buy is taken back. We take our break even on trade that could have been a huge winner, and we take a step back and we don't have to do anything and force anything. Why? Because no one is forcing us to do anything. We aren't being paid to sit here and, you know, make decisions split second every single time. All we have to do is find the moves that make the most sense and then follow our rules for those moves to then come to fruition. And then if those moves want to run, we make a shit ton of money. If those moves don't want to run, we can make some money. And if those moves go completely against us, we can make money later. And this is not financial advice. But I hope you guys enjoyed. That's the best way to start thinking about, you know, utilizing these concepts over time. And again, you know, the reason I wanted to showcase this and make this video, again, this is live price right now, and it happened today, is because it's showcasing exactly what I told you guys would happen in that markup I did before price ever did this. Right now, again, that's going to be released after it happened. So, you know, you could say I recorded it, blah, 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 whatever, but I also have the webinars, which by the way are accessible to you instantly upon you joining up with the mentfx mentorship, link in the description and below. So once you join up, you can go and find the date that was posted and see that this analysis was done way before. And again, I even posted it here. Again, I don't need you to believe that I posted it. I don't really care. I just want to show you and get you thinking confidently about the fact that what we do works, but you just need to begin to execute it, experience it, and then be able to apply it on repeat, cyclically, and then everything will begin to click for you. Right, so two main ways to use zones is one, to actually trade from using the recent ranges that you're in, B, to target but not to trade from, because we understand where our overall bias is currently heading, right? And then allow yourself to be wrong if you need to. So that's all, guys. I hope you enjoyed it. Thank you very much for watching. Leave a comment, leave a like, blah, 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 subscribe. Love it. Cool. Yeah. Mwah.
Hey, how's it going, guys? Just a quick update. Now it is officially June 8th, I believe. So you're seeing this in the future. However, mentfunding has continued to post some amazing updates. We've continued to add things. We have $0 commissions going on indices and commodities. We got the new payout options going now too. So, you know, those payouts are now available to you as well. We got commissions down on normal FX to, where was it? I need to figure out where this was. To $6. Yep, there we go. We got the actual commissions down to $6 round trip per lot spent. And that's still with the raw spread. So on EU, on UJ, on some of the majors, you're getting about 0.0 spread, quite literally, like actively getting 0.0 spread. So very cool updates. If you're interested in getting funding and you know you've actually executed your system and you understand your system and you're ready to take it to the next level and just get capital, whether it be through a number of firms or even just through mentfunding, you know, give mentfunding a try. Check out the actual website. You know, we've had some amazing payouts, some amazing months, and we're going to continue to grow. And it'd be awesome to have the people that are learning to properly trade come on board and begin to make the firm real money. So thank you very much, guys. I hope you enjoyed the video, and I'll see you all in the future videos. See ya.